Ladies and gentlemen, we are back for another round of an introduction or a reintroduction to our trading team. Today, we're going to profile SCALP Trader, a guy who's been trading for 22 years. Can you believe it, Damon? 22 years. SCALP Trader. Damon Southward, you have the mic.
Hey, good morning, Jim. Yeah, since then, my hair's fallen out, gotten gray hair on my face, but I think with my addition to no longer just scalping intraday and adding some swing and distress strategies to my portfolio, I've extended my lifespan. You know, the early years there, probably first 5 or 7 years of trading actively intraday only, thought I was going to die at a young age.
Yeah, I think we have all felt that at some point. And I am getting a little bit of feedback, Damon, so you might want to turn that down.
Turn the volume down some?
Yeah, just a little bit. Anyway, so why don't you give everyone a little bit of a brief background, how you got started into trading, how it's evolved over the years, and where you're presently at.
Okay, so as Jim mentioned, I've been trading for about 22 years. I started at briefing at 23 years ago, right after I graduated from Stanford and started up with briefing out in California. So I began my career as an equity analyst focused on event-driven volatility. And, once I realized that I was actually pretty good at this pattern recognition of just seeing activity in stocks and being able to kind of predict where things are going to go, I borrowed $10,000 from one of my mentors because I didn't have any money. And fortunately, I was able to pay that back in about a month. So, times were really good back then. So basically from 97 to 2007, I traded almost exclusively intraday. Probably 2003 to 2000, from 1997 until about 2000, I traded almost exclusively on the long side. Then 2000, starting with the turnover and all the tech stocks, I traded almost exclusively on the short side. And there's still a lot of money chasing those names. You get a pop-up and just a massive reversal. And so back then, when I first started trading, maybe you can make 30, 40, 50% of the name in an hour or more on the long side. Then during that period, 2000 to 2002 or 2003 or so, the opportunities were more robust on the short side. So you play that gap up reversal, maybe make 10 or 15% in literally 10 minutes on multiple names throughout the day. 2003 is about when I started to recognize that fundamentals actually were starting to come into play. A lot of these internet companies that had huge runs that had actually, burned through a lot of money, fired a bunch of employees, were actually starting to turn profitable again. Their business models were actually starting to make sense. And so probably around 2003, I started to get more interested in swing trading and, being invested in companies. There's still just so much going on that it just took me a while to kind of get my, add that strategy to my toolkit. During the financial crisis, 2007, is when I really started to expand my strategies. And that was because, I was seeing opportunities of companies that were clearly going to survive, but were getting crushed down to pennies. Or, I remember one of my big trades, I bought General Growth Properties, which is a huge, I think the second largest mall REIT in the country. On the day they filed bankruptcy I think I bought it at 27 cents. And that stock went on to probably go to, I think over time, given all the distributions they made and all the spinoffs, probably a $40 stock, $40 or $50 stock. It ended up being acquired for like $20, but then they spun off a bunch of properties, and I think the stock itself actually recovered to over $30. Now, but here's the mistake I made. So I bought it at like 27 cents. My plan was to hold it for multiple years because I felt the value was at least $10. And I ended up selling it, I think, for maybe at $1 or a little bit less than $1. So although I made, multiple times my investment, that really kind of stuck with me. I literally left millions of dollars on the table on a relatively small investment. And so that was the thing that kind of stuck with me and really made me think about, okay, even when markets are moving fast, you have to take a step back and recognize opportunity and make sure you don't let it pass you by. So that's one of the ways I've kind of changed my style over the years. So try not to just be an intraday day trader and get so focused on scalping when there's major opportunity present.
All right, so you've changed your style quite a few times, and right now you're probably doing a little bit of a little bit of everything. So how do you, I guess, how do you do it from a strategic stance where you want to make some money during the day? How do you divide your time appropriately? I guess that's the question.
Okay, and I don't have the visual up, so can you go to the strategy rotation slide?
Sure.
All right. And so this kind of explains it to some degree. So, there are certain periods of time where, so like during high volatility market periods, I trade scalp. I'm scalping actively because there's tons of opportunity. But when you get these high vol periods, that's when you really get these compelling long-term research-driven ideas. So I try to divide my time between scalping and doing research and finding these compelling opportunities. And so literally when we have, say, vol is above 22, the VIX is above 22, you have things just falling apart, blood in the streets. Like, I get no sleep because I'm scalping intraday, I'm doing research during the night. Just throughout the night, because, these things can turn around pretty quickly, right? And so there's really no time for sleep. There's just so much opportunity present. You have to grab it, when it's available. And that's one of the things that, I like to really point out to people. A lot of people, when the bell opens, the bell rings, people want to trade, right? And, really, it's really important to kind of understand the environment that you're in. There are periods of time where you really shouldn't be doing a lot of trading, right? Like, there's just nothing compelling to do. But when there is opportunity, you really have to embrace it and jump on it, because that explosion of volatility through that small window may make your entire year. So you literally can make your entire year over a 2 or 3 week period. So it's really important to recognize those periods and be all over them.
All right, and so what would you say the period we are in right now?
Well, so I feel like over the past couple of months, energy, for example, has been really out of favor. And so you'll see, if you look at my portfolio, I've added a lot of energy names, particularly MLPs. And, one of the things that, people don't realize is that energy MLPs, the midstream players, have really brought down their leverage a lot. And so, like, the last time energy prices crashed, oil prices, natural gas, a lot of these companies were so levered that there was just no chance they could survive. And so there were just so many bankruptcies, which created a tremendous amount of opportunity in terms of trading distressed plays, finding names that actually weren't going to go bankrupt, that, were able to, rebuild a business, able to roll over debt, were able to make strategic deals such as selling assets in order to raise capital. In this period, I think this is very different, yet the market is reacting very much the same. People are just, oil prices go down, natural gas prices go down, get it out of my portfolio. And so I've been able to find some pretty compelling opportunities because of that. We own MMLP, which is a energy MLP that we bought at almost a 30% yield. Sold most of it into about a 35% gain in a few weeks. And that's one that, I mentioned yesterday. They came out yesterday. They maintained their distribution. Had some positive comments about the second half of the year. They expect their distribution coverage to be really strong in the fourth quarter of the year and going into next year. I mentioned SMLP today, which also maintained their distribution. I think we own that one at a 22% yield. So we're coming out of a period, for example, of somewhat of energy distress. there's been a lot of opportunities on the energy MLP side. I own several other energy MLPs with yields of 12 to 14%.
Okay, now let's talk about what differentiates the different strategies that you implement throughout the course of your trading day. And we're going to start with the swing trading strategy, and what are some of the things that you're going to look for?
Oh yeah, so with the swing trading strategy, it really incorporates fundamentals, market sentiment, technicals, and so from one of my core approaches is a relative value approach. And so I often look for a secondary play in a hot space, and I find it easier to identify these types of names and participate in a hot trend rather than to try to figure out and time the next hot trend. And so TLRA, for example, which is one we purchased, I think this summer, and it rose about 100% after I bought it. It was really simply a case of me scanning the markets for an attractively valued name that should benefit from the whole connected TV trend that drove TTD shares dramatically higher. And also within, another strategy I really like is special situation strategy. And so a couple of recent examples, MNK, Michael Nancy, whatever a K word is, kangaroo, were able to pick up about a 67% gain in 2 days on that one. Picked up ENDP, about 30% in 2 weeks. And, these were special situations scenarios that I just did a lot of research on and felt comfortable putting on. MNK also owned some of the bonds that I bought at like 28, 29 cents on the dollar. And, so it's a situation where, I dig in, do a lot of research, and find compelling opportunities both on a short-term basis and hopefully a long-term basis as well. But I kind of cycle through these names again. And so, for example, with MNK and ENDP, because I've done the research on them and I'm trading them so actively, I kind of know I know the moving parts better. And so when news hits that may create volatility in those names, I feel like I have an edge in terms of taking advantage of that volatility.
All right, and you also do a lot of work on some of the distressed names as well, in which you'll have a big move in one of these, and you even highlight it as your blood in the streets strategy. So why don't you talk about this one a little bit?
Yeah, so call that the blood in the streets, and many investors have to go through a lot of pain for this opportunity to make it to my radar. So with RRD, I like the fact that the company had a small market cap, high leverage, but was starting to turn the corner based on its latest earnings report. And, I wasn't the only one to recognize the opportunity, as two different funds began aggressively accumulating the stocks soon after my entry. And so I sold out of the last piece of that yesterday for 123%. And I think we entered that, probably about 2 months ago. So 123% return over a couple of months, not too bad. And, really goes a long way to helping you have a successful year.
All right, and you also have an income strategy that you update this quite a bit. And let me get this slide up. There you go. So you have an income strategy, and you already touched a little bit on the MLPs and what you look for. But how long do you usually plan on holding these things, and what are some of the risks associated? Because it's not just free money.
It's not free money. I consider it free money, but it's not free money. I'm really good at the income side. I mean, I consider myself really good at this, really talented this area. And so I actually do look at it as free money for myself. I mean, there are obviously risks. A lot of these names are higher yield securities. But I do a lot of work on them, and I spend a lot of time following them, researching them, understanding them. And my goal, say with the preferred strategy, is to identify names with 8.5 to 10% yield plus. Sometimes I'll find them at 12 or 13% yield. and to actually trade around them as well, so that you're picking up capital gains as well as the distribution yield. On the MLP side, I'm typically looking for a minimum of 10% up to 28 or 30%, which you come across periodically. I mean, we have two names on right now, one at a 28% yield, MMLP, and one at a 20, I think SMLP. We first bought it at about a 24% yield. And you also have tax enhancement there. Some of those, some of that distribution is shielded from income taxes for a period of time, and it's somewhat complex. But if you continue to hold it, you don't pay capital gains on the entire distribution for all of these names each year. You kind of have to pay, a makeup tax on it later on, but you get to basically ride some tax advantage gains over a period of time. But this, so the MLP side is obviously a little more speculative. Well, it's a lot more speculative than the preferred side. On the MLP side, I'm chasing yields of up to 28, 30%. So there's going to be a lot more volatility in the names, and some of these names, I mean, they could crash and burn. Fortunately, I don't think I've had any situation like that where I've gotten caught stuck in an MLP where it blew up on me before I could get out. But I try to follow these names pretty closely, and when the story isn't taking hold the way that I had hoped for, I try to, steer clear of them and, get them off the books. And so another name that I'm down right now is the UBS 2x mortgage REIT ETN. And, I've stayed away from the mortgage REITs for probably 5 or 6 years because I just didn't like the environment for mortgage REITs. However, with the Fed starting to, basically ease again, and the yield, the curve steepening, and also a slowdown in refi rates as mortgage rates tick back up off the lows, I think it's almost like a perfect environment for mortgage REITs. And people have been wary of them and kind of knocked them over the past couple of years, but I think it's now time to ease back into the space. And so this MRRL, we bought it at about a 20% yield. I think it's up maybe 5 or 6% since we bought it, and I think it's one we should be able to hold for a couple years at least.
All right, and I just want to touch back on the distress strategy, in particular RRD, and wondering, how did RRD end up in your how did that end up on your radar in the first place before you even spent any time researching it?
I think I caught this one on an earnings release and saw that, it's a distressed name that I followed. I followed it over the years periodically and just kind of on the back burner. And they had a really good earnings report. Stock responded well, dug in, listened to the conference call, looked to see what they'd been doing to try to turn the company around, and was really impressed. I mean, highly levered company that it's either going to go bankrupt or the stock's going to see massive gains if they're able to turn it around. And that's one of the things I really look for in a distress strategy. When a name where things look really bleak, but if you have a talented management team that's able to put a few things together, get some momentum going, something can turn from I think in this case they had, I think enterprise value of over $1 billion, and about $1 billion of that was debt. I think the market cap at the time was maybe less than $100 million. So basically the company was being priced for bankruptcy. If they're not going to go bankrupt, then they're actually going to be able to start to pay down some of that debt. I think this one actually pays a dividend as well. And so they were moving in the right direction. So I was able to buy it after the earnings report, and the stock actually pulled back more just because of market conditions, overall market conditions. So I was able to add a second piece and get on a full position in the name. And then soon after, a couple firms came out, a couple hedge funds came out and started aggressively accumulating the stock, which really helped push the stock higher and validate my thesis.
All right. And so we're only going to touch on this for a little bit because we're going to have a part 2 coming up next week where we'll focus on your more day trading type strategies, your scalping strategies, basically where you got your name from, right? And just give us a little glimpse into some of the things that you look at, and then we'll dive into that a little more next week on the scalping side of things.
Yeah, so I closely follow a list of about 50 stocks at a time to understand what type of news moves them and how they move together. I like to trade the opposite side of broker ratings changes, and I love to play short squeezes, and as well as understood news that may cause a large initial reaction in a stock. So, it's not really that complex. It's really just sitting there as when I started trading, watching the market tick by tick and understanding the rhythm of a stock and how it moves with the market, with other names in its space, the market sentiment. I'm always paying attention to the short interest. Always paying attention to just kind of what people think about the stock. Whether there's people are overly bullish or overly bearish. All those things come into play, and so I take advantage of volatility, technical levels, short squeezes. All those things kind of combine to create opportunities for me. And so a lot of times I have no idea what I'm going to trade when the market opens. I may have a sense of where things will go, such as, okay, well, the market's gapping down. I think we're going to get a gap down, and certain types of names are going to squeeze hard off the lows, or, hey, I think the early push is going to get faded, so you want to fade the gap up, ride things down a little bit, and then cover and flip, and then play a squeeze back to the upside. So I will go into the session with that type of sense of things, but many days I really have no idea what I'm going to trade until you get the opening bell and you just kind of see where things land.
All right, Scalp. So as I mentioned, we're going to take a deeper dive into the scalping strategy a little more next week because I have tons of questions for you. And then we'll go through a bunch of examples and how you size up trades, and we'll be able to really identify how you drum up opportunities and how you take advantage of them, how you define your risk, and all things associated with that. But with that all said, Scalp, I want to thank you for giving us a very nice detailed design and approach to how you come into a day, the different strategies, your background, and I'm going to be looking forward to diving in deeper into your day trading strategies next week. Thanks a lot, Scalp.
All right, thank you, Jim.
Okay.